There's uncertainty throughout the world. Germany also facing uncertainty after its finance minister was fired last month, and economic pressures continue to weigh on China's yuan. So is the dollar still the best bet with all the issues taking place around the globe? Kathy Lien is managing director of FX strategy at BK Asset Management. Kathy, what do you say? I mean, is King Dollar likely to stay king for a good long time?
I think that there's many signs to believe that the U.S. dollar, which has had a very, very nice run, is rising for reasons that are very appealing compared to a lot of other countries around the world. For the most part, it has to do with the underlying strength and outperformance of the U.S. economy. We've seen pretty much back-to-back disappointments in economic data from China, from the Eurozone, from other countries around the world, and here in the U.S. we're actually seeing, mostly data improvements. Now, we've got a very important report this Friday, the U.S. jobs report, which, may not be as lofty as people anticipate or economists are looking for, but it will still, regardless, show underlying strength in the labor market. And I think that outperformance will keep the market and keep traders buying dollars.
How does the strong dollar and the relatively weaker or weakening currencies of other countries, whether it is the Mexican peso or the euro or the Chinese yuan, how does that play into the tariff debate? Does it make the tariffs pinch a little less or pinch the same amount? How can we think about these two things in tandem?
That's a very good question. So, the greatest threat for a lot of these countries, as you mentioned, Mexico, Canada, China, in the coming years is going to be the possibility of seeing some, very damaging tariffs. And what ends up happening is that, when you have a situation where the dollar, the US dollar in this case, is so strong, it does make the tariffs a little less painful for Americans. But at the same time, though, I think, if we're looking at it from a trajectory of what it means for those countries, it may make it a little less painful, but I think it still poses a threat to overall growth, and it's going to maybe make more manufacturing facilities move into the U.S. and at the risk of exports from those countries being suffering as a result.
Kathy, when I think about the dollar the next couple of years, it makes my head hurt trying to figure out where it's going to go. In the first Trump administration, we saw a run up by inauguration. It kind of just went flat for the next few years before COVID hit. What do you expect this time around?
Well, I think, Kelly, it really depends upon whether this is just deal making on behalf of Trump. And, we've seen him meet with Trudeau. We've seen him, talk to the European leaders. And if there is a deal or some sort of concession reached before his at the beginning of his term, or before anything gets really serious, it may not really affect the currency market that much, and they may actually benefit those currencies and push the greenback down a little bit. So I think it really depends upon whether it's like 3D chess that he's trying to play and trying to get something that's more favorable for the U.S., or it's a serious threat and he's going to move forward day one. The 20% tariff on Canada and Mexico, which I think is unlikely. So at this right now, what we're seeing uncertainty and volatility, and investors are still, looking at the greenback as a safe haven, and that is the main driver at this stage.